The truth about making money in the markets. If you think day trading is all about staring at charts, clicking buy and sell, and making easy money, you're in for a wake-up call. Let's get one thing straight. Day trading is not a get-rich-quick scheme. It requires skill, patience, and a deep understanding of market dynamics. It's not about finding some magic indicator or secret strategy that prints money no matter what the market is doing. There are no shortcuts or foolproof methods. Trading is 100% dependent on volatility. The more the market moves, the more opportunities there are to make profitable trades. If there's no movement, there's no opportunity. A stagnant market means fewer chances to capitalize on price fluctuations. That's why real traders watch the VIX, the Volatility Index, because when it's low, the market is basically untradeable for short-term strategies. The VIX is a crucial tool for gauging market conditions. The VIX measures the market's expectation of volatility. It's an essential indicator for traders who rely on market movements to make profits. A high VIX means traders are expecting big price swings, while a low VIX means they're expecting things to be relatively calm. Understanding this can make or break a trading strategy. Think of it like this. The VIX is like the weather forecast for traders. Just as you wouldn't plan a picnic without checking the weather, you shouldn't trade without checking the VIX. And just like you wouldn't go surfing in the middle of a lake on a calm day, you don't want to be day trading when the VIX is flatlining. It's a recipe for frustration and losses. You're setting yourself up for failure. Trading in low volatility conditions is like trying to catch fish in a pond with no fish. So if someone claims to be a successful day trader when the VIX is at rock bottom levels, they're either lying or don't know what they're talking about. Be wary of such claims. They're probably trying to sell you something, a course, a system, whatever. Don't fall for it. Always do your own research and rely on proven strategies. Professional traders wait for high volatility environments where the market actually moves. They know that's where the real opportunities are. They prepare and wait for these moments to maximize their gains. They're not sitting there clicking buttons all day long hoping for a few pennies of profit. No movement, no trades. It's a disciplined approach. Simple, don't force it. Patience is key in trading. Wait for the right conditions. When the market is ripe with volatility, that's when you strike. Look, having a solid trading strategy is important. It's the foundation upon which successful trading is built, but it's not the be-all and end-all of trading success. A strategy alone won't make you a successful trader. Even with the best strategy in the world, trading isn't about pressing buttons. It's about idea generation. It's about constantly coming up with new concepts and testing them. And here's the reality. 95% of the ideas on a professional trader's watch list are garbage. That's right, 95%. Most ideas won't pan out, and that's perfectly normal. Think about that for a second. The majority of ideas won't work, but the few that do can be incredibly profitable. Pros spend hours looking at data, market sentiment, and sector trends before even considering an individual stock or asset. They dive deep into the numbers and the data behind them. They're not just throwing darts at a board and hoping something sticks. They're methodical and strategic in their approach. They're constantly asking themselves, what's moving? Why is it moving? What are the underlying factors driving this movement? And what's the data behind the move? Understanding the narrative is crucial. They're looking for catalysts, for triggers, for anything that can give them an edge. It's about finding that one piece of information that others might have missed. And only when the watch list proves that an idea is working with price action confirming it, does a trader actually put money on the line. They wait for confirmation before taking action. They're not gambling. They're making calculated decisions based on data and analysis. Every move is backed by thorough research and understanding. This is where my free download template comes in. It's a free tool to help you structure your watch list the right way, so you only focus on high probability setups. It's designed to streamline your process. It's the same template pros use every single day, and it's helped me achieve consistent profitability in the markets. Consistency is key in trading. Download it now in the description below and start building a watch list that actually makes you money. Take the first step towards more disciplined and profitable trading. Chapter 3. Myth. Number 3. Day trading is quick and easy. Let's be real for a second. If day trading was easy, everyone would be doing it. The allure of quick profits and the freedom to work from anywhere is tempting, but the reality is far from that dream, and if everyone was doing it, there wouldn't be any money to be made. The market thrives on competition, and only the most prepared and disciplined traders can consistently profit. If anyone tells you day trading is easy, they're lying. It's a high-stakes game where the odds are often stacked against you. The best traders in the world only get about 50% of their trades right, and that's considered world-class. They spend years honing their skills, learning from their mistakes, and constantly adapting to market changes. Think about that. Even the best of the best are wrong half the time. It's not about being right all the time. It's about managing your risk and maximizing your gains when you're right. But the difference? They're disciplined. They follow strict rules and never let emotions dictate their decisions. They cut losing trades at 8 to 12% max, while amateurs hold on to bad positions, hoping for a miracle. This discipline is what separates successful traders from the rest. They know that the key to long-term success is to cut your losses short and let your winners run. This strategy ensures that their gains outweigh their losses over time. Before you take a single trade, you need to do the work, analyzing sectors, identifying trends, and watching market sentiment. This preparation is crucial for making informed decisions. Only then do you build a watch list. A well-researched watch list is your roadmap to potential opportunities. You need to have a plan for every trade, and you need to stick to that plan no matter what. This plan should include entry and exit points, risk management strategies, and profit targets. Trading is a marathon, not a sprint. It requires patience, persistence, and a long-term perspective. It takes time, dedication, and a lot of hard work to become successful. There are no shortcuts or easy paths to consistent profitability, but if you're willing to put in the effort, the rewards can be life-changing. The financial freedom and personal satisfaction that come with successful trading are worth the journey. If you're not willing to put in that work, don't expect to make money day trading. It's that simple. The market rewards those who are prepared and disciplined. Chapter 4. Myth number 4. The more trades, the more profits. This is one of the biggest misconceptions about day trading. More trades don't mean more profits. More quality trades do. It's not about quantity, it's about quality. The best traders are patient. They wait for clear confirmation from their watch list before entering a trade. They don't jump in just because something looks good on a chart. They wait for their setups to come to them. They know that the market is like a casino. The house always has an edge. But unlike in a casino, where the odds are stacked against you, in the market, you can actually tilt the odds in your favor by being selective with your trades. Successful trading is about filtering out bad setups and sticking to high probability trades. It's about waiting for the right opportunities and then pouncing on them with precision and discipline. And that's why having a structured watch list is essential. It helps you filter out the noise and focus on the trades that have the highest probability of success. Remember, it's not about how many trades you take, it's about how many winning trades you take. Focus on quality over quantity, and you'll be well on your way to achieving your trading goals. So here's the reality of day trading. It's not about magic indicators, secret strategies, or taking every trade you see. It's about understanding how the market works, developing a solid trading plan, and having the discipline to stick to that plan. You need volatility. No volatility, no trade. Watch the VIX. Don't even think about trading if the market is dead. You need to generate ideas constantly and remove bad ones. Don't be afraid to throw away 95% of your ideas. The best traders do it all the time. You need a structured watch list before risking a single dollar. Use my Freedom Load template to help you get started. You need discipline, because even the best traders lose half their trades. Cut your losses short and let your winners run. And to help you with that, I've created the Freedom Load template, a free watch list tool that helps you filter and track only the best setups. Download it now in the description and start trading smarter. If this video helped you see through the lies about day trading, hit like and subscribe to IBF channel. Let me know in the comments. What's the biggest trading myth you've heard? See you in the next one.